You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again for Education Wednesday here on the network, the day where you folks get your double dose of edumacation here on the old network. Of course, kicking things off with the premier educational program, Options Bootcamp. Later on today, you're going to get Options Playbook Radio as well. Glad to see both Dan and Brian back from their little sojourns there. So back at the education windmill once again, tilting at it this week. So look forward to all that great content. Of course, I enjoyed doing a Q&A with you folks last week. I want to make sure you guys never miss out on a boot camp out there. And you clearly have a lot of questions, and I don't blame you. These are crazy times that we are all living through together. And let's see who we're living through this show with. Let's head on over to the land of Frankfurt, also known as the Options Mecca outside of Chicago. Little known Options Mecca over there. We are joined by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the program. How was your sojourn last week, sir?
Oh, it was really great. Headed out to Boulder, saw my daughter, did some hiking, and it was really nice. We brought our little Yorkshire Terrier with us, and she did some hiking. It was great.
I know most of the West is on fire. Is the Boulder area, is that on fire, or is it good out there?
It wasn't bad. There was some fires, I think, not too far away from there, but the skies were reasonably clear, which was nice. Last time we were out there about a year ago, oh my God, it was so hazy because of the fires. It was crazy.
Things are bad when you look around downtown Chicago and you see a lot of haze just drifting in from the wildfires out west. So again, like I said at the top of the show, Dan, crazy times we are all living in. And you know what that means. When things are crazy, people look to us as sources of information, try to talk them off the ledge and calm them down a little, maybe sometimes a little bit literally in this case for this week. So let's see what you guys have on the brain. It is time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, well, welcome to the mail call. This is the portion of the show where you guys take the reins, your questions, your comments, your insights, your pearls of wisdom. If you guys are in the secret club, you guys can find out more at theoptionsinsider.com/pro is the place to go to learn more about engaging with us, getting all the live shows throughout the week. Plus, of course, you get a great pro Q&A with Scott Nations yesterday. If you missed it, if you go on the pro now, you can, of course, access it now and check it out for yourselves. You, of course, participate in all of our future pro Q&As. Of course, Options Oddities coming up every Friday as well. TheOptionsinsider.com/pro is the place to go. If you do that, you can join all the folks in there right now, like Mr. Nichols, who's having a ball. He says, boot camp. Yay. I'm with you. It's exciting for boot camp day. He also, Dan, I know it's been a while since you've done this, so we'll ease you back in. Nichols has a very, very demanding question for you. He wants to know, what is Dan's favorite bass guitar? Dan, if you don't know, listeners, a famous, legendary, dare I say it, a bass guitar player in multiple bands. Mr. Dan, what is your favorite bass guitar, sir? Nichols wants to know.
Well, I do have to admit that I'm partial to the Rickenbacker 4003 Fire Glow. I've got one of those, and man, I
That sounds pretty cool. Is that one of those guitars you light on fire? I see the guys lighting them on fire all the time, like smashing them. Is that why it's called a Fire Glow?
You theoretically could. It would be an expensive hobby, but you could.
So there you go, Nichols. I'm not a guitar guy. Hopefully that answers your question. Are you a Fire Glow fan? Let us know. Hit us up. But Mr. Dan, you've been out there. It's crazy times. We saw while you were gone, we saw the markets having some interesting issues, selling off a little bit, then rallying, and then selling off, then rallying. A lot of topsy-turviness out there in the marketplace. So I'm sure as all this was going on and continuing somewhat this week as we're seeing Vol take a bit of a dive this week, I'm sure you've had a lot of people come to MTM with some, shall we say, intriguing head scratchers out there. So what's the coolest, most head scratching question that's come across MTM since the last time we chatted, sir?
Oh, I've been getting actually a lot of questions about has this earnings season been more volatile than previous earnings season? And the answer is yes. There's been a couple of really interesting things, and it's kind of top of mind. I'm going to be talking on Bloomberg TV after this about it with Abigail Dulo. There's been a couple of interesting things this earnings season. The first thing is that we've gotten some of the best results this earnings season that we have in well over a decade. I don't know exactly how far back, 10, 15 years for sure. So many upward surprises, so many revenue beats, and just, so many year over year gains. But the story that people are not really talking about is that, at least in a lot of the names that we're watching, it's kind of a little bit more difficult to measure, but the gaps, and when I say gaps, I'm specifically talking the price on the close before earnings compared to the price on the open after earnings, immediately following earnings. They've been just beating historical gaps leaps and bounds. We saw that in JWN yesterday. We saw it in Dick's, from yesterday to today. Just huge, huge moves. And we're kind of in the midst of retail earnings season right now. And I think a lot of that's going to continue. Some names like Big Lots and Dollar Tree and Ulta, they've got earnings coming up, in the remainder of this week. And all three of those stocks have had some really big moves in the past. So we'll see. We'll see if that continues to play out for those three. I've got straddles on each of those. So we'll see how well those continue to beat from a volatility standpoint.
Yeah, that's something we've been talking about on a lot of our other shows as well. It's only listeners. If only there was some way for you guys to check that data for yourselves. All right, there is. TheOptionsInsider.com. Click on that Options News and Articles tab. You'll see all of those earnings move results. And as Dan was kind of just alluding to, the earnings season reports that will tell you exactly how things are breaking down. If you see those, you'll see right now we're hovering at about an 84%, which means if you bought a basket of all the earnings straddles out there for this season, you'd make back about 84 cents on the dollar. It doesn't sound that great because you're losing money, but then if you looked at pretty much every other season throughout the pandemic period, you lost a lot more than that. So this is definitely one of the better performing seasons that we've had in quite some time, and we had some names dramatically outperforming their earnings straddle, which is something we haven't seen in quite some time. So if this trend continues, and we just listened to our volatility views, just had Matt from Oratz, the team who crunches all these numbers for us on Vol Views, and we were talking about that with him as well. Check out that episode. It's fascinating stuff, but he's even very optimistic this could be the season where we finally break the cycle. Something we've been waiting for ever since March of last year, listeners. What's it going to take to make these names actually stop outperforming their earnings straddles? And we're finally, just in the last couple of weeks, because week one of this cycle was 74%, so still underperformed. Week two was 56%, so pretty much got back half of your money. Week 3, 67%. Then the worm started turning on week 4, 102%. That's the first green week we've seen in ages. And then week 5 was 101%. So not annihilating, not knocking the cover off the ball, but doing a heck of a lot better than they have. And then so far this week, 76%. So check it out for yourselves, theoptionsinsider.com. Click on the Options News and Articles tab. You can't beat the price. It's all free, and it's all great data. Just because I strong-arm those guys over there at ORATS, I said, no one's really crunching these numbers. People really should. And so we decided to give it to you folks. So check it out. It's fascinating stuff. If you like trading around earnings season, or at the very least, just even pay attention to earnings season, you should, because that drives a lot of the action that's going on in the rest of the market this time of year, then it's something you should check out. Speaking of checking things out, you guys have been bugging us for a long time to bring back our questions of the week. We have done just that. We had a fun one last week. I want to pay it off now because we were talking about on the show last week. We asked you guys, everyone has vol on the brain these days. I wonder why that is. Which of these products holds the vol crown? Quite simply, which of these has the highest 30-day at-the-money volatility? As usual, we asked you not to cheat. Don't look it up on your brokerage platform. Just use your gut. And Dan, fully half, pretty much exactly half of our audience, 50% exactly, came in and said Bitcoin. By the way, we gave you 4 choices: Bitcoin, VIX, crude oil, and Tesla. Names that have various degrees of being synonymous with volatility. And number 2 was VIX, 21.1%. Number 3 was Tesla, 15.6%. And number 4 was crude oil. Dan, does it surprise you that our audience would go deep down the rabbit hole of Bitcoin being the most volatile, sir?
No, I think that's an easy call, man. I mean, it was 30 grand, a beat ago, right? And 50 grand, I don't know exactly where it is now. I don't have my platform open for that, but I mean, that's a pretty darn big move. That's a 66% move in a pretty short period of time. It
is pretty volatile. Bitcoin has been, if you listen to our crypto rundown trading listeners, Bitcoin has been hovering around an 85, sometimes flirting with 100 vol out there. It was about an 85 when we posted this poll. Tesla was at about a 40.5. What WTI, so crude oil, was at about 35%. And VIX, remember, we quote that VVIX number. VIX is a very volatile thing. Volatility moves around, as you can see. VIX was at about 105% when we posted this. So VIX is the actual winner, even though you folks chose Bitcoin. Just something to keep in mind when I'm tossing around VVIX on all the various shows. I don't do that for my health, listeners. I do that for you folks to get a sense of what's going on out there. Speaking of what's going on, Dan, another question. People have been asking us this. So we thought we would turn the spotlight back on you. If you're listening to this live, you could vote. If you're listening after the fact on Education Wednesday, you should still be able to vote. Now, some of you come in months and even years down the road. This poll won't be live then, unfortunately. But if you come in through the end of this week, you can play. Go to @options on Twitter to make your voice heard. It should be pinned there for you. And you'll see this week's question. We asked you a lot of turbulence in the market recently. What do you feel is the main driver of this latest round of volatility? And again, if you don't have your answer there, you could send in your own. We gave you 4 choices: the Delta variant, the Afghanistan issues, the Fed tapering concerns, or overall market valuation concerns. And a bunch of you have chimed in with your responses. Jay tries to trade, getting political here. Says, should have included one that says the current president. And then he says, rolling on the floor laughing, hashtag. So maybe he's joking. Then we have Cheap Risers. Okay, Cheap Riser says, dude. I'll give him a surfer accent. Dude. Hashtag all of the above, dude. Funny, this just came out as I just opened a SPY call diagonal spread this morning as this poll came out. So he thinks this poll may weigh on his SPY diagonal. Then we have currently dealing with bugs. He just sent a cool gif of a fortune teller with a crystal ball. I guess he's saying he's having trouble picking the future. Mr. Dan, if you had to pick one of these 4, what is it? And more importantly, what do you think our audience is voting for, sir?
Yeah, I mean, it's hard to differentiate between what I'm thinking and what the audience is thinking. I mean,
you are a man of the people, after all.
Yeah, indeed. I don't know. I mean, market valuation concerns. The Afghanistan thing. I don't see that in the short term within the next year affecting the market very much. Just stepping out of my trading mindset into just my military strategist mindsets. I can't imagine a scenario where that's not going to be a big problem a few years from now. But, over the next 6 months, year, I don't know. I don't see it being an immediate threat. But, the Delta variant and Fed tapering concerns, for sure. It's hard to pick between those two. And I don't think anybody needs me to tell them that. If you just look at what happens to the stock market when the pandemic gets worse, it goes down, right? And so that is an obvious concern. And when we hear more about Fed tapering, you don't need me to tell you that either. When we hear more news about that, the market goes down, right? So I would say that those are probably the two biggest threats, I guess you would say, to the market and to the market, I think was the question. I'll stick it to that.
Our audience right now leaning heavily towards the Fed. Fed tapering concerns 55.5%, Dan, followed by about 19% for the Delta variant, 16.2% for market valuation concerns, and about 9.5% for Afghanistan. Again, I'll be live throughout the rest of the week, so if you're listening to this after the fact, you can still make your voice heard. Speaking of making your voice heard, I touched on this last week, but he wanted your thoughts on it too, Dan, so I thought I'd give you a quick chance to weigh in on this. Plus, we were just talking about this earlier in the show. You were very excited about earnings season. Chinook wants to know. So I can't remember if you did an episode of Options Bootcamp covering how, quote, expected move informs your trading decisions. If you haven't, I would love to hear what you and Dan have to say about it. I kind of went into on this a little bit at length, kind of defining, obviously, expected move at the money straddles, what it is and what you can do with it on the last week's show, Dan, while you were busy hiking through Boulder. But I'm curious if you have any thoughts. So what do you have to say for Chinook? What do you typically use the expected move for, and anything else you want to share with Chinook?
That's my main trading strategy. We do a lot with that. We call it our total earnings domination strategy. And it's the best strategy that I trade by far. Basically, what you do with it is you fade it one way or the other because it's almost always wrong. In fact, it is always wrong to some degree. Maybe it's a penny off. Maybe it's $10 off. And so what I do is I do a very, very specific analysis using a spreadsheet, plugging in certain data to see whether my opinion is that the expected move, which is kind of a silly term in my opinion, basically if the volatility is overpriced or underpriced. And typically it's overpriced, and it sounds like the data that Mark and Matt Amerson were talking about illustrates that. But this quarter, there have been a number of cases where the volatility, even in the front expiring options, have actually been underpriced. It's been really interesting.
And do you use it as, you mentioned you use it in your trading, do you use it as setups for, let's say, I don't know, Iron Condor, Iron Flies, anything like that? Or you said it more like fading the name based on the straddle? That's what you use it for?
I never trade directionally. I do 99% of it is 1 to 2. Well, basically 95% of it historically has been doing time spreads, because usually the quote unquote expected move is way too high. Just people overzealously overbuying options. And so putting it on time spreads where we buy the cheap ones in the back and sell the expensive ones in the front tends to pay off under certain circumstances. This season, I've actually been buying. I've been doing a number of time spreads, but I've been buying a disproportionately high number of straddles. I would say maybe high 30s%, 38, 40% of my earnings trades have been straddles this season, which has never been a thing since I started Total Earnings Domination about 3 years ago.
Look at you buying straddles out there. What have you done with Dan Passarelli? Just slinging straddles willy-nilly out there. We were joking at the beginning of the pandemic last year, right? Like, this is the time when buying straddles actually pays off because things were so crazy. You could buy a straddle and almost pick anything. It didn't matter, and it worked. But that's when you know markets are crazy, listeners. But Dan still liking himself a little bit of straddles. Going back out to the live, Luigi out there says, just wanted to tell Dan he puts on a phenomenal webcast. He is almost as good as you, Mark. Well, okay. Let's not get crazy there, all right? I mean, I don't do webcasts, first off. I do shows. And then B, I mean, let's not keep his head any bigger than it is. But Dan, Luigi likes your webcast. What do you say?
Well, I'm definitely handsomer than Mark, so I've got that going for me.
For all the blind folks out there, perhaps they would agree with you.
I guess I got it. Is that why you don't use video in these? They call it face for radio.
The audience has enough to deal with the vast amount of data they're getting from us and analysis. They had to deal with the beauty on top of it. It would be overwhelming to most human eyes, sir. So it's really a gift. It's an act of mercy to the audience out there. Speaking of Luigi, he wants to know, you're talking about straddles, Dan. He says, does Dan hold straddles up to the expiry date, then get out, or reset the position based on how much the stock moves and how much before the expiry date does he put the trade on? So he wants to know when you put it on and when you take it off, Dan.
Yeah, it varies a little bit. The one constant is I never, ever hold straddles to expiration, ever. As soon as you can get, as soon as you can hit your targets and get out at the price that you're looking, it is time to get out. The longer it's a hot potato, man. The longer, it's a slow death from theta. The longer you hold it, the worse. Like, for example, right after this show started, I had a straddle on in Micron, and I actually intended to close it and take a loss earlier today, and just had all these things going on, and it ended up having a big move today. Had my resting GTC order in, and boom, it hits because Micron's up a fair amount as of today. So like, as soon as I put in a straddle, I put in a GTC order, and usually I'll spread that out into 2 or 3 orders.
Speaking of GTC orders, Dan, our next question comes from Eric. He says, I love the show, guys. Well, right back at you there, Eric. He says, you've helped me make a lot of money since I discovered your channel. And maybe more importantly, you helped me not lose money as well. Well, that's kind of the goal. First off, we help you to avoid losing money. Then hopefully we can help you add on top there. It says, recently, Dan P., and he puts in parentheses, I ain't about to try spelling his last name right this second, mentioned that once he opens a position, he will set a GTC order to close it out. Then he said he will set an alert for downward moves so he knows when to close it if it moves against him. What do you guys think of OCO? So one cancels another order for this use. Put in a limit order to close at your profit target. He says maybe 50% or whatever it is you choose. Then have a stop limit order to limit your loss. I do realize there could be some slippage if the price blows through my stop order. But if it comes to that, I would probably be happy to get out wherever I could. I work a normal job during market hours. I can check in now and again, but I am unable to monitor constantly. Yeah, that's a problem a lot of people have there, Eric. He says, over the 3 years I've been selling vertical spreads, I can't tell you how many times I had a spread go from almost hitting my target sell to nearly a max loss in the blink of an eye. I've been working on making my trading more and more automatic. Let me know what you think. Thanks for all that you do. So, Dan, you're a big fan of GTCs. Let's start there. He said, what do you think about this idea of, first off, what do you think of OCOs? Do you use those? And by the way, these kind of order types, listeners, of course, OCOs, not all platforms offer all of these. Like, for example, I was playing around with my IRA platform the other day. They don't allow some of these advanced order types and things like that in that brokerage platform. So your mileage may vary on some of the platforms. But Dan, maybe first off, explain why you like GTC so much. And then what do you think of the OCO order type and maybe using that instead?
I mean, I love GTC orders just because, I trade every day. And so I'm not likely to forget about a position that I have on. But hey, just in case, what if, I don't know, you end up getting sick, ended up in the hospital, you just want to have those orders in just as some sort of a safety net, I would never recommend just putting in a GTC and taking off and looking at your computer a week later. I like to look at it, but it's just comforting to have it there. Now, as far as OCOs, I've taken to using them under some circumstances lately. And one of the things is about 3 years ago when I started using the total earnings domination system, I have to do some very, very specific tests, and I was using the E-Trade platform, and on the E-Trade platform, I was using it in a very intuitive way, And I noticed that the numbers were just like dreadfully wrong. Like I was actually using it to trade for like maybe a couple earnings seasons. And then I was doing one of our masterminds in Chicago where we take some of our elite students and we all trade together over a 3-day period. That's coming up in October, by the way. And one of the students pointed out, he goes, hey, these numbers don't look right. I looked really close and I was like, holy moly. Like the platform, the E-Trade platform that I was using was just like dreadfully wrong. I don't know where they were getting these crazy numbers. And I was like, oh my God, I'm going to lose money, if I'm trading off these numbers. So I switched over to Thinkorswim, which is extremely powerful, right? And just like every single person on the show, like, there's a lot of things that I do in my life that I have to learn and all this data that I have to keep straight. And so even though the Thinkorswim support desk is probably the best out there, and I did talk to them a couple times, including setting up, like an in-person meeting to have them show me some stuff. I could not for the life of me figure out how to set up OCO orders on TOS. And then one day I just ended up figuring it out. And so now I use them on a regular basis. But the thing is they can really only be used on directional trades, like buying calls or buying puts. You can't use them on straddles, like that doesn't work. You can't really use them on credit spreads because those are sort of time contingent as well. You definitely can't use them on time spreads. Those are very time contingent. And when you have 2 or more legs, you're giving up the bid-ask spread on 2 options, and stop orders are just a nightmare. And that's what I'm specifically talking about here, is the stop order side of an OCO. But with our red knockout system, which is one of our newest things that we just rolled out about a month ago, that's a call buying system. It's a momentum-based system where you just simply buy the 45 delta call. And so with that, as soon as I put that on, boom, put in my profit target, because it just shows up right on my platform with the script that I run. And then I put in the stop, both OCO and that one can be set it and forget it. I put that on. I put one of those on before I went to Boulder, and I really did put it on and not really look at it for a week, because if you got the profit target and you got the stop order in, I don't know. I mean, spending more time thinking about it is the only thing that can come out of that is bad stuff. The only thing that can come out of that is you're going to start overthinking stuff.
Yeah, see our psychology episode from a couple of weeks ago. But yeah, I think this works. A lot of people do this. If your platform will support it, Eric, and as Dan mentioned, not all trading styles are suited to this, but if your platform will support it and if your trading style is easily adaptable to this kind of stop limit and OCO type, then you should be doing this. This is a great way to have peace of mind during the day, and also to help going into a trade, you have a reasonable expectation of where you're going to get out on the upside and where you're going to get stopped out on the downside. So then whatever you're doing during the day, I don't know, teacher, brain surgeon, plumber, whatever it is you do, you can focus on that and let your trades kind of do their own thing. And that's a much healthier way to go about this stuff. All right, Dan, we got a bunch of people coming at us, but kind of coming up against it here. But here's an interesting one. Not our usual listener. This is our buddy Sahid Ahmed. He reports for Reuters on options and things. And he's got a bit of a bee in his bonnet, Dan. He's mad about a story that Bloomberg had about Scion Asset Management holding what they quoted $280 million worth of puts on the iShares 20-year Treasury bond ETF. And he says, this story says they hold $280 million of puts, but that's wrong. He goes on, he's up in arms. He says the reporting of options positions is different from that for stocks. The stocks in the figure report is actually the value of the shares. For options, the SEC requires the report to state the value of the underlying shares, not the options. The $280 minimum figure in Bloomberg is from the number of shares referenced by the puts. That is not, in exclamation, not the value of the positions. And so, in short, they don't have $280 worth of puts. And he goes on a rant about the logic of reporting options positions in notional terms. The only info there is that the fund owns X number of puts and calls, no strike, no price, no expiry, no clarity on whether it's a spread position. How is that useful? And I wrote to him, and I said, the truth is, the media sometimes, they like a sexy headline. You could say, hey, they own 1,000 or 10,000 XYZ puts, Or you could say, hey, they own 280 million of these puts, and that one sounds a heck of a lot sexier than the other. I also said it's completely misleading and really contains very little meaningful information, so it shouldn't be that way. But that's the way it unfortunately is, and he kind of agrees. So maybe our buddy Sahib will help lead the charge at Reuters against reporting in notional value. But what are your thoughts on this, Dan? It bothers me. I've kind of gotten used to it. I kind of see it now. I'm kind of like, okay, it's another reporter, doesn't really know what the heck they're talking about. But is it a bee in your bonnet the way it is for Sahib over here at Reuters, sir, about people throwing around these notional numbers that could be wildly misleading?
I mean, I don't like it. I won't say that I have a bee in my bonnet about it, because I just get apathetic to it, because like every time I read an article, and there's some great reporters out there, like guys like Steve Sears, like there's a whole bunch of great reporters out there, right, on options. But like a lot of times there's not, a lot of times you get exactly this. They're talking about notional value, and maybe it is like you said, Mark, to just use a bigger number so it's sexier, right? But I mean, even like what the SEC requires, like 13F reports are kind of like weird too. Like it's just long positions, not short positions, and like it's you get so little information out of there. Like even what they require for short interest, it comes out twice a month, and like when did they do it? Is it still on? Like the reporting is, I mean, it's probably designed poorly intentionally, I guess, either that or folks at the SEC, I don't know why it is. I really don't. But when you like a lot of the reporting that you see, government or media is really, really just doesn't deliver the information that you wish you would get.
That is definitely the case. I'm just scrolling here really quickly. All right, let's try to squeeze in one more here, Dan, before we have to run. I know Brian's champing at the bit to get on a little bit later to do OPR here today as well. Here's an easy one, but also a deceptively complicated one. Rob Clem wants to know, what indicators do any of you use to trade options on SPY? Dan, I know you're more of a technical guy than I am. What are your favorite indicators? Could be for SPY or maybe for something else in general.
I use fairly simple technical indicators. I use horizontal support and resistance. I use the 250 and 20-day moving averages for various things. I look at some specific patterns like our RKO. And then, of course, I use volatility charts specifically for trading the options. That's the bulk of it. I mean, there are times when I'll add some other things when I need to, just when I need to discern some other information. Slow stochastics is one of my favorites, ADX. Oh, what else? I mean, it depends exactly what I'm looking for. But as a constant, horizontal support and resistance, 250 and 20-day moving averages and vol charts, that's about 90% of what I need. I find when you start getting too fancy, it just starts getting silly.
Never let it be said that we are silly here, Dan, on Options Bootcamp. Unfortunately, that music means we've come up against it here for today. But don't worry, listeners. We'll be back next week. And, of course, if you're listening after the fact, I don't think Brian's going to be live today. I do think he will be live to tape, though, so you'll get it on demand. So wherever you're listening to Options Bootcamp, first off, if you're just subscribed to Options Bootcamp, you're missing out on a whole ton of other content. So make sure you upgrade to the full network, including OPR. It's a great show for all of you listeners of Options Bootcamp. It's really very much the sister show to this program. It's a great 1-2 punch for options education out there. And, of course, all the other shows we do, if you get a little bit more advanced, the option block, a little bit more advanced, volatility views. If you're on the asset management side, you can get into, of course, the advisor's option, a whole bunch of other stuff in there. This week in futures options. If you're into futures options, if you're into crypto, the crypto rundown, chances are we got something for you there on the network. And, of course, if you like engaging live and everything else, you can go to the plus or indeed to the pro, theoptionsinsider.com/shop is the place to go to learn more about that. And, Dan, if they want to learn more about your masterclass and your mentoring over there, where should they go? What should they do?
Make your way on over to markettaker.com. The mastermind rather is a little, I won't say it's invite only, but if it's, if you're fairly experienced and you think that a really intensive thing like that is something that's suiting for you, just go to markettaker.com and message me personally there. And, we can email back and forth. Just leave your email. We'll email back and forth and see if it's a good fit. And if it is, we can talk about it.
Where's my invite to the mastermind? Dude, why you leaving me out, dude? Why you leaving me hanging, bro?
I'll tell you what, man, you should come by. We're actually just now starting to look for, just some of our friends in the industry. And that would be perfect. Special guest appearance by Mark Longo.
There we go. Like I said before, be hard for them to handle the physical beauty in person, so we might have to deal with that with some, some special advisors or thing. We'll work it out. We'll workshop it off the air. Check it out in the meantime for yourselves. MarketTaker.com. 2 T's. Don't forget the second T over there, listeners. And of course, we're back later today with OPR. Then throughout the rest of this week, we've got the double dose tomorrow. This week in futures options and episode 2 of the Option Block Friday volatility views. For all of you in the secret club, you get Options Oddities after that. Then we're back again next week all the way through to another Education Wednesday, another episode of Options Bootcamp. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.